students of economics. Welcome to yet another teaching module. This module is titled Indian Economy 1950 to 1990. We are going to focus here on industry and trade. Are you ready to learn something new today? Let me take you on then. In this teaching module, we will learn about the impact of the first 5-year plans on the industrial sector. Small-scale industries during the initial years of planning, the IPR 1956 and its features. Why was the public sector given a leading role in industrial development during the planning period? What were the changes in India's foreign trade during the period 1950 to 1990? And India's trade policy during the period 1950 to 1990. First things first, let us study what was the impact of the first 7 5-year plans on the industrial sector. First, let's examine what is the purpose of industrialization. Economists have found that poor nations can progress only if they have a good industrial base. Industry provides employment, even in agriculture. It promotes modernization and overall prosperity. So therefore, the first 7 5-year plans gave importance to industrial development. Let us study the impact of the first 7 5-year plans on the industrial sector in terms of the role of the public sector. Now, what are public sector undertakings? They are undertakings or enterprises that are run, owned, managed and controlled by the state or the government. Now, at the time of independence, Indian industrialists did not have the capital to invest in industries, nor was the market big enough to encourage industrialists to undertake major projects, even if they had the capital. So therefore, the state had to play a large role in promoting the industrial sector, and this led to the policy of the state or the government controlling the commanding heights of the economy, and therefore the growth of the public sector took place. Let us now examine the strategies employed in the industrial sector during the initial years of planning. In the first 7 5-year plans, trade was characterized by an inward-looking strategy called import substitution. This means substituting imports with domestic production. For example, instead of importing vehicles made in foreign countries, industries would be encouraged to produce in India itself. Protection from imports came in the form of tariffs and quotas. Now, what is a tariff? A tariff is a tax on imported goods. They make imported goods expensive and thereby succeed in discouraging imports. What are quotas? Quotas specify the quantity of goods which can be imported. So tariffs and quotas are a form of trade barriers. That is how they try to discourage imports and encourage exports, as well as domestic production of goods and services. Let us examine the impact that planning had in the initial years in terms of the achievements in the industrial sector. The achievements of the Indian industrial sector were reflected in the GDP. The proportion of GDP contributed by the industrial sector increased in the period from 11.5% in 1951 to 24.6% in 1991. Industries also showed an annual growth rate of 6%. No longer were Indian industries restricted to cotton textiles and jute. The industrial sector became diversified by 1990 due to the public sector. So here we can see in the table the share of agriculture in 1950 to 51 was 55.9% of the GDP. The share of the industrial sector was 14.9% and the share of the services sector was 29.2%. Then in 1990-91, the share of the agriculture and allied services in the GDP was 33.2%, the share of industries was 25.2%, and the share of services increased to 41.6%. So you see, on account of the diversification of industries, which is having many types of industries under the public sector, helped the industrial sector to grow. What happened in terms of results being achieved through planning in the industrial sector? The promotion of small-scale industries gave opportunities to those who did not have the capital to start businesses. Protection from foreign competition helped the development of indigenous industries or local industries in the areas of electronics and automobile sector. We spoke about small-scale industries in the previous slide. Now let us see how was a small-scale industry defined during the initial years of planning. Small-scale industries are defined with reference to the maximum investment allowed on the assets of a unit. This limit, of course, has changed over a period of time. Way back in 1950, a small-scale industrial unit was one which invested in a maximum of rupees 5 lakh. At present, the maximum investment allowed is rupees 1 crore. At the time of planning, the production of a number of products was reserved specially for the small-scale industry. They were also given concessions such as lower excise duty and bank loans at lower rates of interest. Just to encourage small-scale industries, these measures were taken. Now let us learn about the IPR or Industrial Policy Resolution, which was passed in 1956. It was a resolution that was adopted by the Indian Parliament for the industrial development in India. This resolution was to create a socialistic pattern of society. Now, under this rule, there were three categories of industries, which were Category A, which included industries that are the exclusive responsibility of the state. In other words, all public sector undertakings would come under Category A. Then we had the Category B, which included industries that will be predominantly owned by the public sector. However, the private sector would be supplementing the efforts of the public sector. Lastly would be the Category C, all the remaining industry types that will be managed by the private sector would be included in this category. Now let us try to understand what came about or what happened as a result of the Industrial Policy Resolution of 1956. In order to open a new industry or to expand an existing one, a license was required to be obtained from the government. If the industry was opened in a backward area, the government would offer a subsidy and other facilities such as easy licensing. Now this step was taken to maintain regional equality. In order to increase production, a license was required so that no such goods were produced which is socially undesirable. It is very important to know why the public sector was given such an important role in industrial development during the initial years of planning. Now, the public sector has been playing a very significant role in the development of industries in the following way. It helps in the creation of a strong industrial base which did not come from the private sector. The public sector helped to bring about the development of infrastructure, which is the essential need to set up industries. The public sector helps in the development of backward areas. It helps to mobilize savings and even earn foreign exchange. It helps to prevent concentration of economic power in the hands of few private stakeholders. Thereby it helps to promote equality in the distribution of income and wealth. And it also helps to provide employment. So for this reason, the public sector was given the commanding heights of the economy. Now, what were the changes in India's foreign trade during the period of 1950 to 1990? So if you're moving now into studying the trade sector and what happened during the planning period in this sector. After independence, India's foreign trade recorded a noticeable change, such as decline in percentage share of agricultural exports, increase in percentage share of manufactured goods in total exports, change in the direction of export trade and import trade, and decline of Britain as a main trading partner. Let us now examine India's trade policy during the period 1950 to 1990. In this, we will learn about the impact of the inward-looking trade strategy on the domestic industry. Now, this strategy is technically known as import substitution. What does this mean? It means substituting imports with domestic production. Now, imports were protected by the imposition of tariff and quotas, which protect the domestic firms from foreign competition. This inward-looking trade strategy helped to save foreign exchange by reducing the imports of goods. Now, we know when we import goods, we have to pay in terms of foreign exchange. So if we succeeded in reducing imports of goods, that means we also saved foreign exchange. The policy created a protected market in large demand for domestically produced goods. Now, when we say that we have reduced imports, it means that the focus would now be on goods produced within our country. And so in that sense, the domestic markets were protected. The strategy helped to build a strong industrial base in our own country, which directly led to economic growth. So after all, this inward-looking trade strategy was a success. The import substitution strategy is not free of criticisms. There are certain demerits and we need to look at them. This strategy did not lead to the growth that it expected to achieve. There was lack of competition, which meant lack of modernization. Now, when we talk about lack of competition, it meant that industries that were producing domestically were no longer competing with imported goods produced by foreign industries. This resulted in the growth of inefficient public monopolies. We know that at the time of planning, when planning first started, it was the public sector that took initiative to set up industries, and that led to the public sector enterprises having a monopoly. Now, what is monopoly? Monopoly is a situation where there is one seller selling a particular product and many buyers. And so a monopoly firm would have control over the market, being the only one in the market, right? So at that time, the public sector enterprises were playing the role of monopolies. The strategy did not lead to efficiency. The private industries did not focus on increasing their productivity or efficiency. So in that sense, this strategy is criticized. In this teaching module, we have learnt about the impact of the first 5-year plans on the industrial sector. We learnt about small-scale industries during the initial years of planning. We went on to study the features of the Industrial Policy Resolution 1956. We learnt about why was the public sector given a leading role in industrial development during the planning period. We went on to learn something about the trade sector during that period. That is, what were the changes in India's foreign trade during the period 1950 to 1990. And we also went on to learn about India's trade policy during this period. So students, I thank you for giving me a listening ear. Please go through the video again so that you kind of register all the information and knowledge that has been imparted to you in this video. Thank you so much.